Let's get in Vinit Bolinjkar, Head of Research at Ventura Securities. Vinit, does a 40% higher outlay than earlier envisaged and more of it in the green portfolio enthuse a head of research of a sell-side firm like yours?
So definitely, it's 30% higher. They were trying to deleverage. Now they are moving towards a, incremental debt to EBITDA of 1.5. And that is actually going to bring it down, the net debt to EBITDA. Apart from this, what we are going to see is, they are walking the talk of investing about 100 billion over the next 7-8 years. So 714s are 98. That's about what you will see being the incremental capex over the next 7 to 8 years. Important is that that entire investment, 70% of it is loaded towards the green energy and hydrogen evacuation, generation and transmission. So we're going to see a lot of investment come into Adani Energy Solutions, Adani Green, and Adani Enterprises. The rest of the investment they're planning to spend on airports and the airports business. So all the high growth and hyper growth areas where the group is focused on is going to receive a lot of that spend.
Let's do this company by company, and I want to start with Adani Enterprise. A few months ago, there was a report by by a US brokerage as well, the sell-side brokerage, that said that this Adani Enterprise is a publicly traded incubator, and it does not reflect the kind of value of the other companies that Adani Enterprise holds. Do you agree? Do you feel like the current valuation of Adani Enterprise does not reflect all the parts of the business that it's currently in, and this additional investment push is only going to make it even more attractive at this price? And if yes, what is your target price on Adani Enterprise?
So I think, we just did over the weekend, we did a little bit of number crunching on, if you were to invest for a 4 to 5 month period in Adani Enterprise, what kind of growth can you get without value unlocking taking place? So we believe that their cash flows are expected, free cash flows would drive quite handsomely, and we are expecting a 135% upside from Adani Enterprises. This is not taking into account the, as I said, the value unlocking from listing the various businesses. There, what would happen is that once the businesses are listed, their investment multiples being sunrise sectors would be different. So at a bare minimum, we are looking at a kind of a near, 135% growth, or doing 20% CAGR in free cash flows, discounted to present value, over the next 5 years. So that is the kind of growth that you will see coming from Adani Enterprises.
Vinit, just specifically want to understand about the airport play. Your Navi Mumbai airport, inauguration is going to happen, and the airport play becomes a big part of Adani Enterprises valuation. How much do you expect it to contribute, and what is your outlook there?
So, we see the management is looking to grow their airport business. They have a vision of doing $2 billion of EBITDA on this business. Okay, that is going to come about largely from the non-aero part, and they have a very, very large land bank which they are looking to monetize into creating the space around the airport into a kind of a hospitality initiative. So having business centers, having hotels, having hospitals and entertainment arenas around the place where they can enhance value for the people who are coming to the airport to to see off the passengers. So all this is going to remain a very, very bright spot. They have a lot of land, 650 acres around most of the airports, which they're looking to monetize. And this is going to really, really help them grow. It will be the only, whenever it gets listed, it will be the only listed airport play globally, which is more than 1 or 2 properties. say they currently have 8 airports along with the Navi Mumbai airport, and they're looking to acquire additional airport properties around the globe. And hence, they would, because they're on a high growth trajectory where their non-aero revenues are significantly lower than what others are, we believe that they will get a very, very high valuation.
Choksey also with us. Vinit, please do stay on. He's MD DRChoksey Investment Managers. Deven, very good morning to you. We're talking about all things Adani. Big investment and capex push announced over the weekend. And it's coming at a time, interestingly, when you have the election season also going on. Post-elections, the government capex push comes back into focus. A lot of focus on core infra projects. We want to understand, as per you, which of the group companies look the most attractive with an upside? A lot of focus on ports right now in terms of brokerage notes.
Good morning, Tamanna. Well, I believe that I think government's entire program of spending 142 lakh crores by 2030 onto the infrastructure is basically the catalyst behind this particular growth program that the group Adani has taken up. In my viewpoint, I think be it in the area of renewables, be it in the area of including green hydrogens, be it in the area of other infrastructure assets, including airports, seaports, roadways, railways. I believe that I think this group is fully focused and probably the only group in the country which is fully focused on building the India infrastructure in line with the government's vision. So, from a perspective of looking at the business per se, one would look at financial numbers like this. That currently, they are about 80,000 crore EBITDA, and which is growing at the rate of around 20%. So, obviously, what we are talking about is in 4 years from now, we are talking about growing the size of the EBITDA from 80,000 crores to 150, 160,000 crores. And that's where probably I think one could argue that in next 5 to 10 years, when India is progressing faster in building the infrastructure, this group would have actually I think created a sizably large amount of infrastructure assets in each of these verticals. Pertinent question of yours as to which one looks better. To me, I think the name of the game is integration. If you have the roads, if you have railways, if you have ports, and if you have airports, ultimately what you do is you integrate them and I think create a very powerful logistic management system, which is ultimately creating a large size possibility of generating the revenue on a sustainable basis. In infrastructure business, I think sustainability helps, and that is where probably they are better off. On the other side, the utility portfolio, which includes the generation of power, be it from thermal sources or be it for the renewable sources, and then distribute it through the transmission lines, is again, I think, a portfolio which remains absolutely formidable portfolio. So, in my viewpoint, I think each of these particular portfolios would have a meaningful contribution to talk about. Maybe it would be not correct on one's part to I think say okay, which one would get the priority. Of course, I believe that the port has a larger amount of visibility, largely because of the eastern and western port connectivity that they've established with the number of ports into their portfolio above 15, including the global ports. And at the same time, I think the cargo handling capacity, which has far exceeded 500 million metric tons per annum. So to a greater extent, I think the port gives immediate visibility, but rest of the infrastructure companies are equally joining in and creating the integrated one.
I want to talk to you about Adani Enterprise. What do you value their airport business at per share? What is the road business value at? And lastly, the solar wind valued at? And what does that bring the total to in the current market dynamics? And keeping that in mind, how much percent upside can investor expect if somebody goes out and buys Adani Enterprise today on back of these three key contributors to Adani Enterprise?
So, Samina, I think we'll take up this particular question in a little different manner. I believe that I think the amount of traffic that each and every airport that they have already acquired, which is increasing, and there are a number of airports I think which they are adding into the portfolio. So on one side, we are having the organic growth happening through the number of passengers taking the airport. On the other side, I think the inorganic growth through which I think you are acquiring the newer airports and creating a larger size across the country, it is the way in which I think you would start valuing this particular business per se, the airport business. More importantly, this particular business is a cash generating business. So on the one side, I think on a daily basis you generate cash, and at the same time, I think it's working on a negative working capital because I think your payouts it takes later, but your the inflow of money on operation side takes up I think on a day one. So we believe that I think on a DCF basis also, if you want to value this particular business, it would be sizably one. I think as I see it. Of course, I don't have a number at this point of time to put before you, but maybe this number would keep on evolving and changing as the dynamics of this particular business is. We believe that I think the road infrastructure in a similar manner, I think the number of kilometers that they're putting across and acquiring the newer roads I think from the NHAI, I believe that they have got a larger amount of visibility based on the number of kilometers that they will have and the toll that they are collecting. All in all put together, I believe that I think it offers 25 to 40 years of visibility on the DCF valuations, and that's where I believe that this company would have continuous growth of around 20% plus in this particular businesses. And soon they get demerged, it would probably create the unlocking of value for investors in next 2 3 years time.
Right. Vinit, one quick last question. Your top two Adani favorites from the group for an investor looking to enter the Adani Group companies from a 2 to 3 year timeline?
So, I think Adani Power gives you the maximum bang for the buck. We think the stock can grow very well. And, Adani Power and Adani Enterprises would be my two top picks from the Adani Group of companies over the next 2 to 3 years as an investment. One more stock that I will add to this is at Ambuja Cements, because they're finishing a large capex, which is going to actually catapult their capacities and make them a very formidable player in the industry going ahead.
Deven, just to get your top picks from the group companies.
If you are looking at near future, which is 2 to 3 years, which you mentioned, then in such situation, I think Adani Enterprise should be the tall one. Because in this company, you have got renewables, in this company, you've got airports, in this company, you've got road infrastructure, and also connects, which is your data center business. Each of these businesses in next 2 to 4 years time are going to have a separate monetization drive. And that's where I believe that the investors would make maximum amount of money in a shorter period of time if they have invested into the enterprise, because that is a company which will probably, I think, unlock value faster. Rest of the businesses are good, but I think they are already maturing and they are already growing at a steady pace now with their own cash generation. This is one company which is bringing out new babies into the market, and that's where probably the excitement would be high as far as the unlocking and the monetization of the investment is concerned.
Deven and Vinit, stay on with us, but this was our focus on Adani Group companies. Just quick disclaimer, the channel that you're watching this on is owned by the Adani Group. We are looking at the story because of its editorial significance and the fact that there has been a huge announcement, but that standard disclaimer there.